I'm Greg Hunter. Welcome to USAWatchdog.com. Back on, it aired the 8th of July. Interview with Craig Hemke at TFMetalsReport.com. This is a guy who's not into hyperbole. He has famously said, listen, you can only predict the end of the world once. You better be right. But he came on and said, listen, I'm going to give you the paraphrase. He did a lot of work on this. It's a lot more complicated than what I'm making it out. You know, JP Morgan lost 29 million ounces, and either they stop shorting the market or they're going to lose the other 120 million ounces they have. Either they get out of the market or the demand dies. Well, the demand didn't die for silver. So the price is going to go up. But really, when do you think this is going to happen? Within about 2 weeks. You know that silver was about 17 and change. And then it went over 2 weeks later, it went over 20 for the first time in years. And it's never looked back. And a great time to have him on after this big slap down in silver, down a little more than $4, gold down 100 and something. Craig Hemke, TFMetalsReports.com. Thank you for joining us today on USAWatchdog.com. Good to have you on.
It's always a pleasure, my old friend. You're looking good.
Hey, well, listen, you're looking good. That's a huge call. I mean, it's going to happen in 2 weeks. I was like, it's going to happen in 2 weeks. Yeah, the price is going to start shooting up in about 2 weeks. And sure enough, it sure did. And now, I called you, I had you on now, and it's a good time to have you on. I actually had you booked because I wanted you to take a nana nana poo poo, stick your head in doo doo lap because you were so right. And we all had a big chuckle about silver being down $4 and gold being down $100. Why is this a laughing matter? Smells like desperation to me.
Well, anyway, it's good to see you again, Greg.
Yes, good to see you.
And what's happening on the COMEX continues. The CME group, to kind of maintain some legitimacy of their pricing scheme, turned the COMEX into a delivery vehicle back in April, where it never had been before. And we've seen record amount of gold allegedly delivered in April, more in June, and even more in August. And we saw record amounts of silver in July. That's a part of what's going on here. And so that was important to happen back in July. But I had to forecast, even before we saw those numbers, I was telling everybody on my site that we are going to have a very strong July. Now, I kind of shorted myself a little bit. I thought we'd get up to about maybe $1,900 in July. And, well, we blasted through that and went almost to, what were we, 2080. I mean, I missed that by 10%. And I thought silver would get up to 21, and geez, last Thursday it got up almost to 30. The important thing to understand after a day like today is the fundamental stuff that has driven gold and silver higher, most particularly in the last couple of weeks. None of that's changed. Let's call it speculative excesses. They get kind of run out.
Wait, you froze for a second. None of it has changed.
None of this has changed. None of the fundamental stuff has changed. You get these kind of speculative excesses that get wrung out every once in a while. I mean, for example, we're recording this here Tuesday the 11th, silver down $4 today. But they traded, Greg, come on. They traded on the COMEX today, this futures exchange. They traded 1.75 billion ounces of pretend fake digital silver. Greg, in a normal non-COVID world, the whole globe, including China, mines about 850 million ounces. So in one day's trading of the phony baloney plastic silver, they traded 2 times global mine supply. Okay? So what happens is you get, like last week, we've been on this tear for the last 3 weeks, and I'll explain to you why and why it's important to understand why in a second. But over the last 3 weeks, we've almost got to where we were parabolic. Silver was up 50% in about 4 weeks.
Yeah, you called that. You said it was going to go higher.
Yeah.
You clearly called that. Whether you called the exact right number, you clearly said that there was going to be a big change. I was shocked when you said, it's going to happen in about 2 weeks. I went, this is from the guy that talks about predicting the end of the world. That's kind of sort of end of world stuff for that kind of a big of a move. I digress. Go ahead.
I do this. This is what I do for a living, and I've done this now for 10 or 11 years. Are like these Elliott wave trading guys and stuff.
Yeah.
That think the price is just a dot on a screen. I mean, precious metals in particular are not just a dot on a screen. What goes into the discovery of whatever price ends up being is really complicated. I mean, it's a multifaceted thing. I don't make it sound like, so you got to have me to see you through it. That's kind of the trick these newsletter guys always, they want you to pay them $100 a month or something because only they understand it. No, it's not that. I mean, if a dope like me can understand it, anybody can understand it. And that's what I try to teach people through my site. But the moral of the story, there's a lot going on, right? And what you saw today, the picture hasn't changed fundamentally. Yeah, they can trade 2 times global mine supply in a day, right? And you get these speculative excesses that get wrung out, but that just resets you for the next move higher. And I mean, again, this isn't complicated. I mean, you got last week as price, heck, I was talking to you last Thursday night on the phone after I got off the golf course, remember? And we were talking silver was almost 30.
Yeah.
From when it had been, 18 a month earlier.
17.
Well, at some point, the chart cannot just go straight up. I mean, it goes up and it goes up and it gets sharper and it gets sharper and it gets sharper. Well, what's it going to do? Bend backward? Right? I mean, at some point it goes up and goes back down. And that's all today was. What's important for people to understand is there is a real significant fundamental reason for not only why price took off like we thought it would in July, but why it really accelerated beginning July 17th. That's the day that may have changed everything. And well, anyway, we should probably talk about that.
Okay, so why was July 17th such an important day? 10 days after you came on, you start really getting this mojo working again, over $20 an ounce on the 20th, and bam, we're never looking back.
Right. And again, anybody that can go to barchart.com or investing.com, just pull up a daily chart. You'll see it was July the 17th that things really started to move. All right. Well, what happened on July 17th? This is really, really important. And it even explains what happened today. July 17th, about, I think it was 5 a.m. Central, maybe it was 5 a.m. Eastern. But a story hit Bloomberg, news story. Yeah, maybe it was an opinion piece. How can you tell the difference these days, right?
Yeah.
So anyway, and it said that a major policy change was going to be coming from the Fed. Now, look, already we know, right? Yeah, it's great that we've added 1.5 million jobs or whatever last month. We still haven't even regained half the jobs we lost in April, okay? So we are entering into a period of what I call, what most people call stagflation, right? We're going to have very bumpy economic growth for years as we deal with the repercussions of what has already taken place with COVID and what's still to come, okay? The Fed knows this. The Fed has already promised that they're going to maintain 0 interest rates on the short end through 2022, okay? So when you see the jobs report is really good, that means the Fed's going to hike. No, it does not mean the Fed's going to hike rates. No. They have said they're going to keep rates low through at least 2020. It's 2.5 years. Okay, so this news story then hits. It's a trial balloon. Early in the morning of July 17th, and like I said, prices haven't looked back since. Well, what this trial balloon said the Fed was on the verge of a major policy change. You've heard, I'm sure, Greg, they always reference their dual mandate, right? Mm-hmm. What's the dual mandate is 2% inflation, because they got to always grow the money supply to service the debt, and this idea of full employment or best employment, they can do whatever. Well, anyway, the policy change has to do with that dual mandate. They are going to let inflation overshoot 2%. They're not going to let it get to 2%. They're going to start hiking. They've already said they're going to keep rates low until 2022 because of the repercussions of COVID are going to last at least that long. So they are going to let inflation go past 2% to 3 or 4. Now, the reason they do that is because you can pay off all this accumulated debt in the less valuable currency of tomorrow. This is how it's always worked. All right. Now, in that article that said they're going to make this policy change, likely in September, the next FOMC is 4 weeks from now, September 15th and 16th. When they make that change and make that announcement, they're going to combine that with what's called yield curve control. We've talked about this before. The Fed has history at this, and they've admitted that they're already studying it. Yield curve control is where they say we are not a certain part of the yield curve. Let's say the 10-year Treasury.
Hold on, just say that again. Yield curve control is, because you froze up a little bit, we are not what?
Yield curve control is we are not going to allow interest rates to move above or below a certain level. Say on the 10-year Treasury note, the global benchmark, the global foundational asset, they'll say, for round number's sake, let's just say we're not going to allow it to go over 1%. If it goes over 1%, we're going to aggressively buy bonds and bond futures and drive the rate back down below. But we're also going to let it fall below 50 basis points. And if it does, we're going to sell bonds and sell bond futures and push it back up. Okay, that's yield curve control. The Fed has done this before. They did it in the period 1942 to 1951, which was the last time debt to GDP, that ratio, was as extreme as it is now. Powell has admitted that they're studying it. They're looking at it. The research bank at the Federal Reserve Bank of St. Louis and in San Francisco, they've been putting out papers on this. They go together, this yield curve control and letting inflation rise. Why? Because in a natural, normal environment, like I had when I first became a stockbroker 30 years ago, if inflation goes up, interest rates go up with it, because if I'm losing purchasing power, I'm going to demand a higher nominal interest rate for my investment, so I at least break even. So if inflation is 3%, I might demand 3% or 4% in a nominal rate from the issuer of the debt, so that at least I'm not guaranteed to lose money, right? Okay, a negative real rate is when inflation is 3%. But inflation is inflation 3%, but interest rates are only 1%. That's a guaranteed loser of 2%.
So they're going to let inflation run, right, and they're not going to let interest rates go up to fight it.
Exactly, precisely. And they have to, because they've said they have to hold inflation or interest rates down. And they're going to do it through 2022. And so these two policy changes go hand in hand. Okay, so they're going to let inflation run, and they're going to lock in nominal rates, and they're going to institutionalize steeper and steeper negative real rates. When they said that, when that article showed it, things don't show up on Bloomberg by accident. Some guy just doesn't write it going, well, I think maybe this is going to happen. Somebody told him that to see what the reaction would be. And when that showed up on July the 17th, the metals took off. Then, Greg, most importantly, it can happen once, and you can say, well, we'll write that off. Last week, I think it was a week ago today, on CNBC, exact same article, that this was coming likely in September. Well, now I think it's been confirmed. Now, maybe it won't be in September, maybe it'll be October, but it's coming. So far, the peak, all-time lows, I guess is the right way to put it, in real interest rates, these inflation-adjusted interest rates, all-time lows hit last week when gold topped out near 2,100 and silver was near 30. Negative 1.1% off the 10-year Treasury and the CPI. Negative 1.1. Gold's 2,100. What's gold going to be at negative 2.1? If the Fed does this, and the Fed's going to do it, they're telling you what if it goes to 3.1? What if inflation goes to 4%, but they're holding rates at 1? You know that in the 80s, in the 70s, when gold went from $100 to $900 in about 3 years, negative rates got to negative 5%. Who's to say that can't happen again in a stagflationary environment where the Fed's just monetizing everything? Politicians have to just keep printing and printing. I mean, they're asking for more and more and more. The Democrats want to do $3 trillion in stimulus. What's going to happen if Biden wins? And this COVID thing continues next year? How big of a deficit, how much debt it's going to be? The Fed's going to have to monetize it all. Eventually, it gets out into the economy. Inflation picks up, but the Fed won't hike rates because they know they can't without crushing everything and increasing this debt service burden. And all of a sudden, negative rates, which got to 1.1% and gold was 2,100, go to 2.1 or 3.1. Do you think a day like today even matters?
Yeah.
No. So then let me give you one more thing. And this is very important for people to think about, again, in the context of what happened here today, Tuesday, the 11th of August, with the silver down 4% or whatever it was, or silver, right, whatever.
This is airing the 12th, so yesterday. Go ahead.
More than that. Okay. Go back to March, right? What happened in March? Well, real interest rates actually went up and the bond market went down. All these kind of things were happening. But gold and silver just got crushed, right? Silver went to 12. And then what happened? Oh, all of a sudden on March 23rd, the Fed announces QE to infinity. So you had this big, massive washout. The banks like JP Morgan trying to cover as many shorts as they could because you don't think that they know what's coming?
Yeah.
Right? These are the primary dealer banks that run the treasury auctions. This is Jamie Dimon and his ilk and Goldman Sachs and Citigroup and the rest. They all know what's coming. If Bloomberg knows it and CNBC tells you don't think JP Morgan knows?
They're buying.
So they've got to smash price as much as they can over the next couple of weeks to flush price back down, to try to get as many of these speculators back out, because when speculators are selling, the banks are buying. They're taking the other side of the trade and covering up their shorts. They've already been doing it the last couple of weeks. If you look at Commitment of Traders report, each of the last 2 weeks, while price has been skyrocketing, the commercials, as they're classified, the banks, have been covering shorts into a higher price. But now they're able to cover into a lower price. They're all plowing the field, setting the table for this major policy change that they're warning you is coming most likely in September. And when it does, I mean, I'm already pedal to the metal. I'm fully invested in mining shares. And I got, all this metal I've been buying for the last 10 years. I ain't sold anything, and I'm not gonna. And man, when this happens, and that's going to be you, me, everybody listening, that's your green light, man. Don't look back. The next couple of weeks, again, my forecast was for a strong July. My forecast was for a pretty choppy August ahead of all of this in September. And I was talking about that in June. I'm standing by it. I would suspect, especially after a day like today, we're going to have some tough sledding for a couple of weeks. But man, oh man, maybe by the next time you and I talk, if we're late in September, early October, well, we'll see how it looks then.
What happens if, I'm of the mind that this could backfire. What happens if they put all this firepower into dropping gold $100, dropping silver 4 and change, and then all of a sudden, next Tuesday or Wednesday, it's back where it was. It's like bombing a bridge in Vietnam in the Vietnam War, right? Yeah. They'd have $1 million bomb on this bridge that was built out of bamboo. They totally destroy it, and a week later, it was back.
Here's another one. Yeah, no, that's absolutely. Look at. It was a great dichotomy and a great learning experience. And I thought it was fabulous in March when they did it. And they crashed the price down to $12 silver, and you could not buy it anywhere for less than 20. And you couldn't buy it for less than 24. And people who think that this is a normal market, they think, well, that's the price. I saw it on CNBC. It was $12. And they go and they try to buy some from either their local coin shop or some online deal, and they can't buy it. They're, wait a second. Hold on just a minute. It says it's 12. And all of a sudden you realize it's not really 12. Well, like tonight, right before we started talking, I went on to JM Bullion's website, who is one of my primary advertisers at TF Metals Report. The cheapest you can buy random year American Silver Eagles is $35.
$10 over spot.
Right.
My local coin store, I called.
Gouging. They're not gouging people.
I called.
You can't get it.
I called my local coin store just before we went on and said, what do you sell over spot? About $10. I mean, you can get 12. Right. And some people are 13, but we'll keep it up with about $10 over spot. So they got to make money and they have to replace their inventory. Go ahead.
And what's the price? Is it the $25 where they trade twice global annual mine supply in a day of these phony baloney derivative contracts that are backed by nothing? Or is the price what you have to actually pay, where you have to give 35 fiat dollars for an ounce? What's the actual price? And that's all part of this. I mean, we're living in historic times, my friend. And as we talked about the last time we got together, it appears to me, from what I know, what I can verify, if that's the right word when we're talking about data from the CFTC and the CME, but we'll use it. From what I can verify, JP Morgan built up this hoard of silver. They had no silver in 2011. They get rubber stamped to start a vault. They collect between 2012 and 2018 about 150 million ounces in their house account. They store it all for themselves. They tell the CFTC, well, of course, we can have a 30,000 contract short position because we're just hedging. 30,000 contracts at 5,000 ounces per contract is 150 million ounces. Gives them monopolistic control over the pricing scheme. And then now that the CME has turned because it's phony baloney plastic banana, and everybody figured that out in March, now they've turned the COMEX into a delivery vehicle to try to give it some credibility. And now all of a sudden JP Morgan's losing their silver. And they're left with a choice: lose your silver or stop shorting. Well, like I said, I mean, I got here. Hold on. Let me reach behind me because I keep my sheets here, hard copies, so I never lose them because I'm an old man, and that's what old people have to do.
Well, they erase them out of the off the internet.
Well, that's right. 2 weeks ago, silver was up $2.74 during the Commitment of Traders Reporting Week, and the commercials, which include J.P. Morgan, added 6,300 longs and had to cover 8,200 shorts while price is rising. Last week, while silver was up $1.72, the commercials, including J.P. Morgan, added 3,900 longs and actually had to add a few shorts too, because the speculators were so busy doing what they do, and so they're in this untenable position at this point. And so ahead.
What does that mean? Whoa! Stop! Untenable position. Explain what that means. They are in this untenable position, which is?
Well, they can either deliver the silver that they have, right? I mean, if they've got 120 million ounces left. I mean, we still haven't seen the 30 million that they allegedly delivered and moved into registered, still sitting there. So whoever bought it from them still has it sitting there. It just doesn't appear to be JP Morgan's anymore. They can either continue to do that and, parse it all out over the next however many delivery months, the next 8 or 10 calendar months, or they can try to cover all of these short contracts, buy them back at a loss so that they don't have to deliver. And then they can keep their physical. Either way, that removes a lot of the selling pressure that's been in these derivative markets for time immemorial. And that's all part of why I was excited that we'd probably have a pretty good July. That's why I'm excited, because none of those fundamentals have changed either. That's why I'm excited that as we go into the fall and into the winter time, God knows how the election's going to play out. God knows how bad COVID's going to come raging back, and all these politicians are going to want to shut down economies again. When you can't tell COVID from the strep throat or the flu or a cold or, all that kind of stuff come fall. They're going to be demanding another 2 trillion here, another 3 trillion there. And it's not just the U.S. And all of this just leads to more and more demand for physical precious metal. Then at the same time, the Fed is going to be dealing with inevitable inflation. Anybody knows that. Go to any store, grocery store, lumber store, hardware store, whatever. You see already this price inflation. And at the same time, they're going to hold interest rates down, making the 10-year Treasury note a guaranteed loser for all these institutions that hold it. I mean, it's a tired metaphor to call it a perfect storm. And I don't want to make it sound like, this is a 100% certainty, guaranteed layup. Because it's not. Who knows what? I mean, it's not like forecasting the weather. I got a pretty, your local weatherman's got a pretty good idea what's going to happen.
But dude, unless something majorly changes, like you said, well, if the demand changes, well, yeah, it did. It went up.
Right.
I mean, so unless they're gonna go for inflation and they're not gonna raise rates to fight it.
Right.
That's what they're saying.
And that puts us right back into the situation that we were last in the 1970s. And it was, that whole decade, we went from a peg $35 an ounce that Nixon broke in 1971 to $875 by 1979. But actually, it went quicker at the end from late 76 to late 79, 3 years. It went from 100 to 9. That's 9 times. There's all kinds of mining shares that went from, $1 to $30, that kind of thing.
So it was, in 74, it was, what was it, 74? It was $100 to 9, so that's 9 times. Well, if it goes 9 times, if it goes 9 times here, we're talking 18,000 an ounce.
Yeah.
Listen, Jim Rickards was just on. I want to get your comment on this. And he's connected. He worked for the CIA. He tells this. He says, I did analyst for the CIA. We played war games against China. He goes to the Davos thing. He knows these people, and now he's saying he feels comfortable saying, well, gold's going to be $15,000 at least. He's on Kitco in an interview. 15,000. Right. This is Jim Rickards, who I like. He's a 3-4-time best-selling author. But now he feels comfortable saying 15 grand. Wow.
Yeah.
You feel comfortable saying 9 times 18 grand, 15 grand? That's what happened the last time in the 70s, right?
I feel comfortable working that way. I have always shied away from saying that the proper value is something per ounce. because that to me is kind of a fool's errand, because frankly, we don't know how many ounces there are. This entire system run by the banks is so hyper leveraged.
Yeah.
1 ounce of gold has been levered 50 times, 100 times. So we have no idea how many owners there are for each ounce that's out there. Everybody shows up at the same time wanting the same ounce. So when you
we do know there's more than 1-to-1 ownership. I mean, Adam McGuire, 8 or 9 years ago, I was telling somebody this. He testified in front of the CTFC and said there's 100 claims on every ounce.
Right. Sister Christian even confirmed that. Jeffrey Christian said that too. And I mean, he's one of the biggest shills for the current system you'll find.
That's like saying there's 100 people claiming every house in America.
Right. So the amount of gold with, let's call it clear title, or the art dealers talk about provenance. The amount of gold with clear title, we have no idea. So if I don't know how many ounces of gold there are in the world that are accessible, and that's the denominator. How am I supposed to know what the right price is?
What can you say for sure by the end of the year? I asked you in the pre-interview, do you feel comfortable giving a price by the end of the year? And you went, okay, I'll tell you what I think. So what do you think the price is at the end of the year? Or what's your prediction between now and the end of the year for physical metal?
We're very likely, again, if I'm right about this policy change, and I think you've been warned. I mean, those trial balloons don't show up.
You're not making it up. It's real.
Yeah, this is coming. So that means we're probably, and again, I thought we'd be in a tough month anyway. So let's just kind of go on vacation for about 3 weeks and not watch, I don't know. It's going to be, August is always volatile, Greg, because all the traders are on holiday, right? Now, maybe this year they don't go so far, but the New York guys are in the Hamptons and the European guys are on the south of France and all this kind of stuff. And so if you have less volume, absent today, which was insane, but if you have less volume, you almost always get higher volatility, right?
Yeah.
So you're going to get between now and Labor Day, might be a good idea just to shut your computer off and look away. If I'm right about what's coming this fall, I thought, like I said, my target for July was to break out above 1780 and go to 1880 because we'd moved up in $100 intervals. We went to 1980 and then a couple, last week, 2080. So I could definitely be wrong on the low end. I think, 26 an important level for silver on a weekly closing basis. We'll hover around that for the next couple of weeks. As we go to the end of the year, 34, maybe 36.
Gold.
That would be logical on the chart for silver. Gold. Now gold's a whole other animal, Greg, because you look at the chart is history, right? So if you're going to try and make a price prediction just off the chart, well, I can look back and say, well, 10 years ago there was resistance there, or a month ago there was support here.
But just your gut reaction. What do you think gold will be?
Higher than it is now.
Okay.
I think here, I'll give you this. It's always important to me that when you make higher highs, either on a weekly or a monthly basis, and close there above your previous highs, that's when you really start rolling. Like in gold, once we got above 1920, which were the old highs, look how quick we went to 2080.
Yeah.
Right? Now we're pulling back. We're back below 2000 as we speak. The next time we get above 2000, and the next time we make even higher highs above 2100, which would, if I'm right about middle of September, might be late September, early October, I think you then go from 21 to 23 or 4 really quick.
Okay.
So by the end of the year, geez, Greg, think about where we started. We began the year at 1520.
Yeah.
If what a 50% year would be 22, 23. Oh my God, when was the last time gold was up 50% a year? I don't think ever, really. Well, maybe since the 70s. And then we're just talking about setting us up for next year. So again, I don't want to get, not because I'm.
So what do you think about the gold price by the end of the year?
Yeah.
Yeah.
Look,
how much do you think it'll be?
I don't know. 23, 24. Rally into November and then pull back in December again, and then tax loss selling, and then you rally. That's how it typically goes. But I think all that's kind of a fool's errand, Greg, because if I sit there on my site and tell people, we're going to X level, and then we're pulling back to Y level, and then we're going to Z. If I'm off, then you end up, people start getting, they sell their positions and they trade themselves out, and then you start chasing, and then you don't capitalize on the big picture. It's like, here, look, I'll just leave you with
in the big picture, stop. In the big picture
right.
is what?
Much, much higher. Because we're in this stagflation and these sharply negative real rates. And the example I gave to folks on my site last week, and I'll just leave this with you because I think people understand this. What was Tesla a year ago? Like $300?
Yeah.
Right? And now it's like $1,300, right? You know who made $1,000 a share on Tesla? Only the people that held it the whole time. Held their nose, looked away, did one of these jobs. They made the $1,000 a share, okay? If you sat, the normal person didn't though. When Tesla went from 300 to 420, which was Elon Musk, I'm taking it private level, then went beyond. Anybody that owned at 300 went, oh my God, I made 50%, it's 450, I'm out. And then they watched it go to 550 and thought, okay, I'll try this again. And then when it went from 550 to 650, they couldn't believe their good fortune that they bought it at 550 and they made 20% and they got out again. And then they watched it go like to 900 and they thought, well, maybe it'll go to a, you know what I'm saying?
Yeah.
So by trading, and that's what a lot of these trading newsletters, that's why they try to get you to trade, because they know that you got to rely on them for all this stuff. And then they burn people out and they got to get new people and all that. I just think that's a fool's errand. You can do that kind of thing. And we did a lot of that stuff at TF Metals Report, you know, in 16 and 17 and 18, when you're sideways. Then, you know, that's where you
trade to try to make some
benefit from trading. But in something like this that is so foundationally, fundamentally, outrageously strong, as I see it for the next couple of years, really, it's like the Bitcoin thing. You buy your stack, you add to your stack of physical metal on dips, like we're currently seeing and we'll probably continue to see for the next couple months. You buy really good quality mining companies if you want some pizzazz. You know, the really big ones, the good ones, maybe the ones that seem undervalued, but they've got solid businesses and they make money. And then you just let it go. Just don't talk yourself out of it every time there's a sell-off.
You can always just buy metal and hold it.
Which is even better. Yes, exactly. I mean, all these people like probably watching us, they're like, good, the shares, metal, the mining shares went down. And they're complaining about silver being $25 or $26 an ounce. Greg, if we'd gone back to the last time we talked and I said, Greg, I know it's July the 7th. You and I are going to speak on August the 11th. And on August the 11th, silver is going to be $25. People go, wow! But because it went to 30 before it pulled back to 25, people are freaking out. Right?
That's right.
So I just got it, please. I just think it's so important to have a long-term perspective and not gamble yourself out trying to call highs and call bottoms. Because in most of the time, you'll be lucky to bet 50-50, just like if you're betting football. So the picture here is really sound and solid for all the number of reasons, including the JP Morgan stuff that we talked about last time. And so it's just really important for people to understand that.
All right. Your website, TF Metals Report, you have some little free deal, or should be a discount. A discount. You have a nice site. A lot of people like it. I hear no one complaining about it. Because I put this stuff up for everybody. I don't make anything on this, so you folks know I don't get a piece of his action. I don't.
Right.
I just like your action. I like your site.
I sent you some barbecue. I sent you some barbecue once.
Oh, you did. That's fine. You don't have to do anything. You're just a fantastic guest, man. I just like having you on. But tell me about what you're going to do with the TF Metals Report. Just a quickie on your site, your community, how much what the discount code is, that deal.
We've done this for your audience before, and there's always a group of people that take us up on it. And I mean, if a little bit of a discount on your first month gets you to give us a try, and you can always go your own way, fine. But it's a great way to get everybody likes saving money. So for the first time in 4 years, because I deal with inflation too, and actually my kids are getting older, and I'm kind of concerned I got a wedding I got to pay for sometime in the next couple of years. Anyway, my cost of living is going up. So I actually, for the first time in 4 years, raised prices at the beginning of this month. It's now a whopping $15 a month.
Okay.
50 50 cents per day. But what we always do for your viewers, Greg, we'll run a 50% off coupon for the next through the end of next week. I'll set it up so it runs through the 21st.
Okay.
You go to TF Metals Report, you sign up for a monthly subscription, and you enter the coupon code HUNTER, and you get 50% off your first month. So instead of 50 cents a day, it'll be 25 cents a day. Instead of $15 a month, it'll be $7.50. You can cancel whenever. I just email me or go onto the site and cancel. But if you stick around, then it goes up to the regular full boat of the whopping $15 a month the next month until you cancel. But I think, man, there's never been, I've never been busier. Site's never had more subscribers, that's for sure, in the 10 years I've been doing this. But it's a good way for people to kick the tires a little bit. I had some people from the last time that tried us out for a month and decided it wasn't for them, or it was too much content, or it was too little content, or it was too technical, or it wasn't technical enough.
Yeah, you got a lot of people on the site. Your community is really good too.
Top notch.
Yeah, your community is really super good.
And like I said, look, you can go to these, subscription trading things and just simply trade.
Yeah.
That's not what I do, man. I'm a gold bug, which means I got to have my fingers everywhere. I got to be watching COVID. I got to watch the economy. I got to watch the election. I got to watch interest rates. I got to watch the bond market. I got to watch the dollar. And so the discussion on a daily basis isn't just we're going to get out here and we're going to get back in there and all that gambling stuff that I just don't think is constructive. The construction is about the site is about what's going on in the world and how we're all in the same boat. So we got conservatives, we got progressives, we got Europeans, we got Australians, we got people from China, we got people from the US and Canada, and we're all in the same boat. I just couldn't be not proud of what I've built. I couldn't be more proud of what the site is, because it's really a bastion of normalcy. It's not, name calling and, zero hedge and Yahoo message boards and Twitter, where people say things to people that they would never say in person.
Yeah. I get you.
So anyway, please check us out. Just tfmetalsreport.com.
Okay. Well, I'll put the links on at the end of the interview and your sign-up page and all that. Craig Hemke, thanks for coming on USAWatchdog.com and making another big call, which is they're going to guarantee inflation, and they're going to guarantee they're not going to fight it. So we're going to have inflation. Right. Craig Hemke, thanks for. Go ahead.
My pleasure, my friend. No, I didn't mean to interrupt you. I said, let's just let's give ourselves a tickle on the calendar sometime around October the 1st, and let's revisit this discussion.
Higher prices is what you're predicting, guaranteed by the Fed. Higher prices guaranteed by the Fed. Is that a good quote from you? Higher prices guaranteed by the Fed for gold and silver.
Some point. The only thing I don't know is if they're going to do it in September. I suspect they will because everybody thinks they will. I knew they wouldn't do it in August because everyone's on holiday.
Well, they're signaling that. They're writing. But they're leaking stories.
Yeah, it's coming.
Yeah. Okay. All right, Craig Hemke, thanks for joining us today on USAWatchdog.com. It's Craig Hemke's TF Metals Report.com. We'll put the links up to the site. There's some free stuff on there without being a subscriber. We'll also put up, your subscription page. Craig Hemke, thanks for joining us today on USAWatchdog.com.
Always a pleasure, my friend.